Hey, it's Carolyn Grimm. Welcome to Nonprofit Financial Mastery. In today's video, we're going to be talking about program service revenue. It's all about funding the mission, so let's dive in. So let's talk about what program service revenue is. And this is earned revenue. It's not a donation, it's not a grant. This is revenue that you are earning by providing some sort of value. And it's always going to be tied to the mission. So let's say you're a museum and you charge people for research services. That's an example of program service revenue that's tied to our mission. So some other examples would be tuition fees for a nonprofit school, ticket sales for museums or theaters or events, membership dues. A lot of different organizations have membership dues, fees for services for counseling, for training, for workshops, and then sales of goods. And those goods need to be related to our mission. So if you're running a bird sanctuary, you might be selling bird books in your gift shop. Now, the reason that program service revenue is so important and is such a great way for nonprofits to increase their funds, it diversifies your funding. So you're not just relying on one or two different revenue sources. You've got more revenue. So if one drops back, you've got others that you can lean in on. It also demonstrates our impact. So when a nonprofit is providing some sort of a service that they're getting paid for, it's showing that we are doing something. We're doing whatever the thing is that we do, and we have proof of it because people are paying for us to do that thing. So for example, if you are running a nonprofit child care organization, you can show that you've impacted X number of families' lives and it brought in this revenue for the organization to keep things going. And as you diversify your revenue, it also contributes to sustainability. So the more diverse your revenue sources are, the more likely it is you're going to be able to build a sustainable nonprofit. Now, when we're talking about program services revenue, timing is everything. Typically, and whenever I say typically, it's my sign to you that you should check with the accountant who does your accounting so that you have specific information about what your nonprofit does to recognize revenue. But typically, it's recognized when the service is provided, not necessarily when the payment is received. So you might be billing somebody for the service that you did. If you're providing childcare, you're not going to usually bill the parents every single day. You may bill them once a week. So you may not get money the day of that you do the service, but that's actually when the revenue has been earned, when you have taken care of the kids for that workday. When we're talking about recognizing revenue, it's going to be determined by what accounting basis you use, whether you're on a cash basis, an accrual basis, or a modified cash basis. When we're talking about program services revenue, it's very important to keep that separate from other types of revenue. So we want to make sure that we are clumping that together. So we would have something like a program revenue account in our chart of accounts, because that's going to help us to classify that in a very particular way. So it's not getting mixed in with our grant funds or our donations for other things. And when we're talking about program services revenue, this is not a contribution. It's not a donation. This is earned revenue. And it's important to keep those things separate. Now, there's also something called UBI, Unrelated Business Income. This is revenue that we may be earning, but it's not related to our mission. It is not program services revenue. An example of that might be a nonprofit that owns a building and they rent out part of that building to another organization or to a business. That is not related to our mission. So we need to make sure that we keep that separate, because that may be taxable. Again, check with your accountant, but we would want to make sure that we are keeping things like that in its own revenue account so that we can keep track of it. So as with everything in nonprofits, we want to make sure that we are doing things in a way that's accurate, but also that's providing that transparency so that we can show what we are doing to our donors, to our grantors, and to the IRS. We want to make sure that we've got things very carefully classified so that we know what we might have to pay taxes on and what our programs are actually bringing in for revenue. And this is something that helps us with financial planning. So we can look at each one of our programs and understand how much revenue it brought in, what the expenses were, whether there's enough funding in there in order to cover those expenses, or if we need funds from another source to keep that program running. But it helps us to have the clarity that we need in order to understand how the money flows through our organization, because money fuels school's mission. I will see you in the next video.